In today's video, I have a tiny AI penny stock that is making big moves, trying to do something that has not been done in decades. This company is looking to disrupt the healthcare industry using AI to perform tasks in less than 2 minutes that currently take approximately 2 weeks. In today's video, I will be looking at HealthTech stock, ticker symbol HIT. This stock is flying under the radar, but has been on an incredible run over the past few months. The stock is up over 500%, and they are recording huge year-over-year growth, but it is still about 50% below its 52-week high. If you like disruptive and innovative companies that are still in their early growth stages, then this is a stock that needs to be on your watch list. Now, we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. HealthTech is an insurtech platform company backed by AI technology. The company offers a dynamic marketplace designed to create customized healthcare plan solutions while streamlining processes through vertical integration and automation. This is an insurance exchange platform revolutionizing the self-funded healthcare market and empower every participant in the healthcare ecosystem. As they say, the key to their success is vertical integration of stop-loss insurance, a quoting technology, DIYBS, benefit system, HiCard, and a network of doctors and hospital facilities, the Performance Network, providing Medicare-based reimbursement pricing, with the goal to streamline the messy stuff, cut the costs that don't make sense, and put the businesses back in control of their health plans. Now, everyone knows just how big of a market this is, and that overall healthcare sector in particular is one of the areas that has been neglected over the years, but AI can really help in the coming years. The overall healthcare service market was valued at $4 billion in 2024, and this is expected to grow at a compound annual growth rate of 7.4% over the next 5 years. HealthTech connects brokers, employers, and third-party administrators on a single intelligent platform to deliver affordable, customizable, self-funded plans. Powered by AI-driven underwriting, rapid quoting technology, national provider networks, and tailored plan design tools, they enable clients to offer cost-effective, transparent, and scalable healthcare solutions in just minutes. HealthTech is the only publicly traded insurtech company combining smart benefits, quoting technology for companies of all sizes, and operate in 47 states. They were founded in 2014, but only went public last year. Looking at the investor's presentation, HealthTech is changing healthcare through digital innovation and transforming healthcare benefits through technology. As of Q2 this year, they have over 940 business clients across 41 states, and they are now growing rapidly with 86% year-over-year revenue growth and 134% year-over-year adjusted EBITDA growth, which I will talk a bit more about in a moment. As I mentioned already, this is a huge market and one that is clearly in need of technological disruption. The US health insurance industry is worth $1.7 trillion, while the US healthcare industry over $4.9 trillion, meaning that the full total addressable market is as much as $6.6 trillion. HIT offers full transparent control with access to extensive data, seamless transactions from all participants, and full transparency 24/7. Their AI-powered platform is not only faster and smarter, but their products cover the full workflow, from plan design and customization with Stone Mountain Risk, underwriting risk assessment, claims and payout management, and provider network integration through High Performance Network. As I said earlier, AI has the potential to reshape healthcare by improving every aspect of the healthcare system while lowering costs. For example, their eDIYBS offers a streamlined and simple process that takes approximately 2 minutes, whereas the traditional procedure can take approximately 12 days. Their high-performance network offers Medicare contracts across 50 states, over 8,000 hospitals, and over 1.4 million provider locations. While their key driver growth and revenue composition is made up primarily of revenues from underwriting, modeling, and revenues from program, which is a flat fee per employee per month. Which leads me on to the best aspect of this company. This is not some small penny stock talking about future revenues that are years away. This is a company that is already producing revenues and growing quickly. Looking at the most recent financials, revenues of $9.3 million are up 86% year over year. The first half year revenues of $17.3 million were 89% of the full previous year. So this growth is huge. Adjusted EBITDA of $1.6 million is up a huge 134% year over year. Their H1 adjusted EBITDA of $2.8 million is over 1.2 times their full 2024 full year. And the company has cash in hand of $8.1 million. So they have cash in hand, they are profitable, they are growing rapidly. This is quite rare for small penny stock growth companies. And it's not just their finances that are improving. Their total number of billed employees has increased about 25% year over year, while their distribution network expanded to 778 partners, up 87% year over year. Looking at their overall balance sheet, we can see that they have total assets of $22 million, a huge increase on the previous year, while total liabilities are just $5 million, meaning that they have an asset to liability ratio of greater than 4-1, which is all very impressive. Now, for the latest news, just over a week ago, HealthTech signed a strategic letter of intent with AlphaTon Capital, a publicly traded digital asset treasury and blockchain infrastructure company, to jointly develop HitChain, a blockchain-enabled healthcare insurance claims processing platform. HitChain seeks to establish a transparent and efficient claims ecosystem that reduces admin costs, improves trust, and creates value for all stakeholders. As it says here, healthcare claims administration in the US consumes more than $300 billion annually in costs, delays, and disputes. HitChain directly targets the inefficiency by applying decentralized, verifiable technology to an industry historically resistant to innovation. According to CEO Tim Johnson, this collaboration is a convergence of insurance domain expertise and blockchain innovation at a significant scale. Claims processing for large employers and insurers can take months and cost billions. HitChain is designed to compress that timeline, reduce errors, and create a transparent system of record. Now, this letter of intent was only signed last week, but it seems that the market is looking at this very favorably because the stock is up more than 11% in the past week alone. And the CEO did also say that they believe HitChain positions HealthTech at the frontier of decentralized healthcare infrastructure, a market opportunity of enormous scale. But what do analysts think about HealthTech stock? Looking at tip ranks, we can see that there are 2 Wall Street analysts covering the stock, and the consensus price target is $338. Now, this price target is actually below the current price, but this is definitely due for some analyst revisions, because these targets were set back in July and August. While the stock itself has been on a significant run for months, gaining over 500% in the past 6 months. In fact, back when this $3.25 target was set by Maxim Group, the stock was trading at a little over $1. And a lot has happened with the company since then, such as their explosive revenue growth and their new letter of intent. Now, this is a very good article on Seeking Alpha. HealthTech validating its growth with solid results, highlighting that HealthTech is delivering explosive revenue and EBITDA growth. The company's aggressive expansion and robust distribution network position it for continued outperformance in the high-growth US digital health insurance market, and stating that HIT is a high-risk, high-reward buy for long-term investors willing to tolerate above-average sector risk due to its execution-dependent growth trajectory. Now, I have looked at a lot of what is in this article already, so I'm skipping down here to drivers and risks, where this analyst has also issued their price target for the stock. There is several points that can drive the company's growth even more, the main one being its distribution network, having a large margin to grow more inside the US insurance niche. As these partners become more familiar with HIT's platform and the company improves it with AI tools, the efficiency of each broker in the network increases, being able to generate quotes for clients faster, besides managing a larger client base and closing more deals than if done manually. The larger its partner network is, the more attractive the platform will be for future partnerships also accelerating, while the biggest risk currently is of execution, where the management of its accelerated growth can be a challenge. In conclusion, it represents a high risk, high reward opportunity considering it is a company in an accelerated growth phase. It represents an efficient platform that transforms a contracting process of weeks into minutes. And this analyst has set a $5.70 price target too, which is higher than the Wall Street analyst targets that we seen a moment ago, but this is also more recent and takes into account of some of the more recent developments, but not all of them. So guys, what do you think about health and tech stock? This really could be a great high risk, high reward play given its huge growth potential and execution so far, with a huge addressable market to grow into. But guys, what do you think? Drop a comment and let me know your thoughts. Remember that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Remember to like and subscribe, and I'll catch you in the next video.